Our next guest says the ingredients for a stock market correction are coming together. Here to tell us about the most important technical indicators to watch, Chris Verrone, partner and head of technical analysis at Strategas Securities. We'll start with the overall markets. Maybe we can talk about Caterpillar at the end. I think that's maybe the way they've got the things built for the segment. So the coronavirus, it's not a technical indicator, but it does maybe give an excuse for maybe we don't resume an upward climb immediately. Is that how you would look at this?
Yeah, you know, I think what I want to emphasize here is when you start a year with sentiment running very hot, it can be anything that hurts you. The market searches for an excuse, and we saw that to start 2020. This is daily put-call ratio, so a good measure of stress in the options market. They started the year exceptionally low. So the market will search for an excuse. It could have been Iran, maybe it's the virus, maybe it's Bernie Sanders, but when you have hot sentiment, you're vulnerable to a setback. So we have S&P down 2% from the highs. I just don't think that's enough yet to say we're through this corrective phase just yet. 3050, 3100 on the S&P is about down 6 or 7. I think that's a more reasonable area to look. And I think the one tactical indicator that matters, you start to get a spike in put calls up to that 140 neighborhood. That's where you would say, hey, sentiment is sufficiently flushed out, but we're just not quite there yet.
Is that the sentiment indicator you would use, or there's something else you might use?
This is hands down the most timely tactical indicator we look at. It has the best track record. And, you know, I would add to that, if this is sentiment, we also need to focus on what's going on under the surface. And if you look at the internals of the S&P right here, one thing we look at is the number of stocks making a one-month low. When you start to get about 55, 60% of the index making a one-month low, that's about as good a sign as any that you're sufficiently flushed out. That hit 30% this week, so not enough internally. 3,100 on the S&P, probably a better level.
So what's your time frame? This is a short-term call you're making. When does the resumption start of heading higher? Intermediate term?
Yeah, I think this is a tactical correction. 1Q, maybe into 2Q. It's an election year. February, March tend to be...
This is an election year.
If you didn't know. February, March tend to be weaker months. The trend tends to resume as you move into summer, so I think you're looking at a weak first quarter, maybe early to the second quarter. But let's watch also some key indicators of when will it tell us that trend is resuming. And I think the transports in particular, if we go to the next slide here, are going to be really timely. This is a group that already had its bear market. Transports were down 40% in 2018, 2019, really have made no progress over the last 12 months. I'm very curious if they hold this upward sloping 200-day. I think it'd be a good message for the broader market. And then you mentioned it with CAT, right? This is a bellwether. This is a timely name. It's already had this down 10, 15% correction. If it can stabilize in this 130, 135 area, I think this would be a good message that the market does resume higher in the back half of the year.
All right. That's it for you today?
Want to talk about anything else?
No. Sorkin, you aware this is an election year?
I heard.
So we're going to vote on this in like 8 months, and yet we're still. Does that make sense to you? If the voters are actually going to weigh in near term, was this the?
You know what's notable is March volatility, Super Tuesday volatility.
Yes, tell me about it.
Trades at a big discount to election day volatility. That doesn't make sense to us, right? If there's going to be,
what can we do? What can an investor do with that, right, Becky?
We can buy March VIX calls and we can sell November VIX calls. If you're going to get a bad election outcome in November, the market's going to price it in long before that.
What does that mean, bad? It depends on. I mean,
that means you can teach an old dog new tricks.
Well, bad is in the eye of the beholder, is it not?
If the market views a likelihood of a progressive candidate winning, there's weakness there, right? So March vol trading 3 points below November vol seems pretty cheap.
You're getting political now. We're going to have to end this segment right here and now. Thank you.
My pleasure.